Welcome back to This Is Jax. I gotta admit, it's been a while since going under the This Is Jax brand. It has been an insane year, and to be honest, had to kind of step away for a little bit, take care of some things, run some business, kind of reevaluate, come back to the table of where we are, and but here we are. So I'm hopping on tonight. You notice I got my Someday Homes hoodie on. I'm coming at you through the Someday Homes microphone. Someday Homes, we are a boutique brokerage in Jacksonville Beach. We like to keep a high standard, and one thing that makes us unique is we also build homes. So not only are we a full service real estate brokerage, but we're building homes, luxury homes, right at the beaches. Our goal is to serve everybody from Atlantic, Neptune Beach, all the way down Ponte Vedra Beach to Palm Coast and into Jacksonville. We do service buyers and sellers all over the city in all 6 counties of Northeast Florida. But specifically right now, we are building in Neptune and Jacksonville Beach. If you're looking for a high quality brokerage, then I'd say check us out. And if you're a real estate agent and you're watching this or listening to this and you'd like to join a cool team that's got no fluff and a ton of culture and all the support you need, then you might want to reach out to me. Shoot me a message. I'd love to connect with you and let you know a little bit more about Someday Homes Realty and Construction. Right now, it is almost Halloween. I got my hoodie on. That's what kind of started that whole thing. But by no means is it cold outside. It was 80 degrees outside the last couple of days. In fact, I woke up early this morning, really early. Finally got up and got rolling around 5 a.m. Got some coffee, went out on the back porch, and it was muggy and hot already. And don't tell anybody I said this, because I've got a reputation to uphold as this guy that loves Florida. This is as far north as I'll ever live. I love the heat. And while all that is true, I got to tell you, this time of year, I am ready for it to cool off. It is so hot out there. It's just unbelievably hot. So we're going to dive into a couple things. What we're looking at right now is now a good time to buy or sell in Jacksonville? Let's break down some market numbers. Let's kind of zoom out. Let's go look at the macro, if you will. Let's see what's going on nationwide. Kind of an interesting week, believe it or not. A little curveball got thrown in here, and we're about to get into it in just a minute. If you're watching, I'll throw all the charts and stuff up that I'm about to go over on the screen as we go over them. And if you're listening to this in the car, I'd say check out the notes, click the link, check out the blog. I'll put it all on there. All right, first thing I want to talk about is basically what phase of the market we are in. Now, in general, we have this seasonal slowdown. So we roll out, obviously, the peak buyer season is in the spring. And this year, in fact, it peaked in May. So kind of earlier than it usually does. Usually that trend line comes up. When we look at this chart here, national single family inventory, we can kind of see inventory for the main part stabilized after the early May peak. What we had going on there, you can see if we would have followed kind of normal 2019 trend lines, that was the last normal year, pre-pandemic, of course. But you can see where we finished off at the end of 2019, right there around 800,000 homes on the market. And then, of course, you see there that we just totally fell off. So for 2020, 2021, 2022, and 23, we have had like a lack of single family home inventory. It's been getting better, 23, 24, and now 25. And it looks like we may finish the year off at 2019 levels. But we've got a little bit to talk about before we can know for sure. Now, normally we would start to see inventory take a dip throughout the rest of the year. And if we followed the same trend that we saw last year in 2024, we would end at lower levels than 2019. But check out this curveball. National single family new listings last week. And look at that. We've got this like seasonal decline jump in listings. Those are listings that are hitting the market. Now, this is quite interesting because what's causing this? And I was in a group this morning and we talked about it a little bit more. And some people were saying, hey, these people are late to the market. They waited until the seasonal decline. But I'm seeing something different. When I'm meeting with sellers, I'm meeting people who are recognizing that days on market is up, recognizing that it takes a little bit longer to get a home sold these days. There is more inventory for the buyers to choose from. The buyers are being choosy. In other words, they want a perfect home. And so sellers who are sitting on a lot of equity, they don't really need to lower the price. So we've kind of got this standoff, and all of that is leading to longer days on market. So some sellers who know this, or that I'm talking to and I'm able to educate them on what's going on in the market, they're able to see this. And what they're thinking is, why not get an early start? It's kind of like, remember it used to be Black Friday, like people would stay up all night, they go camp out at Walmart and for Black Friday early in the morning, and then Black Friday got earlier and earlier. And now it's like the whole week of Thanksgiving is the Black Friday sale online. Or something similar would be like Christmas decorations. Normally, back in the day, it was like, oh, we had Halloween and it rolled through, and then you got ready for fall on Thanksgiving. And then after that, it was like, oh, the Christmas decorations are up. But lately, you go in the store, and starting in like August, they're at Lowe's, Home Depot, they're setting up all the Christmas stuff like in the middle of summer, right? So earlier and earlier, the same thing I think is happening to sellers who are trying to sell their homes. They know it's going to take longer days on the market. They know they've got to be really competitive, and they're saying, hey, I know the spring market's coming, but why wait until the spring market to get out there and compete? Why not get my house ready now? Let's sign our listing agreement. Let's get this place freshened up, and let's launch now in the holidays while everybody else is sleeping. And while there's still buyers that are looking for something really good, because buyers are buying, I'm going to show you that in a minute. Let's get ahead of the curve. Let's beat out the competition so I can get more money for my home. I think it's a great idea, and it's backed up by this right here, weekly pending sales. We also see U.S. single-family homes jumped up last week. When we compare that to 2024, we can definitely see we were on the downward trend by this time of year. And look at this little jump. Yeah, it's kind of up and down, but that was a big jump last week. So kind of interesting, kind of out of the normal. Not only do we see new inventory pop and people will be like, oh my God, it's inventory. We're still so far below inventory levels that are normal that it's not scary. But then we also saw pending sales go up. So all of a sudden, we just got a bunch of activity in the market. You know, interest rates have been trending down. We know we're expecting a rate cut this week, but those prices are already cut in, already priced in, if you will. See, the market knows that the Fed is going to cut the rate. So what do? They anticipate that, and they cut their rate. The Fed sets the cost of money to the banks and the financial institutions. The financial institution knows they're going to be able to get that money cheaper. So what do? They turn around and they lend it to the consumer for cheaper ahead of what the Fed does based on their statements earlier in the last couple of weeks. And then they're also watching labor markets, 10-year yields, the stock market, everything else that goes into it, inflation, and they're calculating, hey, I think the Fed's going to lower the rate, and the Fed has all but come out and said they were going to lower the rate. In fact, it looks like it's about 100% chance they're going to lower it this week, and then in December, it's looking like a 90% chance, and even into January, I think they got another opportunity to cut it, maybe like a 50-50 chance. So we're looking at several rate cuts moving forward, and the markets are already kind of pricing that rate cut in. So sometimes they'll come out and they'll do a rate cut, but then mortgage interest rates actually will go up at that point, and a lot of people get confused about that. But that's basically because the market already kind of knew, and then something changed, and there's a response. That's that. But really interesting to see that at this time of year, we've got both sellers and buyer activity. And I'll tell you from experience, I myself have got some listings that kind of have been on the market a while. We've lowered the price. We've got creative. We've changed some things. And all of a sudden, this last week, we got like multiple showings over the weekend. I've got some interest on the phone. So this time of year, you still move homes. In fact, there was a home that we closed in the spring of 2024 this year that we put on the market in between Thanksgiving and Christmas. So sometimes if you're available for that and you're like, you know what, I don't mind doing the showings during the holiday season. Sometimes there's visitors in town. There's people who have time off work. It's kind of a great time to get on the market. A lot of people don't think it's a great time to get on the market, but honestly, people have time off work. They've got family in town that's visiting that might be wanting to make a move here. What an opportunity if you had your house ready to go, ready for these people, and say, hey man, why wait till spring? I'm ready today, and let's get a deal going. That's what we got going on. Let's talk about the median price and equity here in Northeast Florida, though. Our median price, $395,993. That's in Northeast Florida, so we've got all 6 counties there, Duval, Clay, St. John's, and the other surrounding counties. Duval County, 340,000. Now, we're still up. This is kind of interesting because we can look at some charts and we see we're down, we're up. Are we down? Are we up? Or are we down? Or are we up? What are we? Are we losing money or are we not? My neighbor lowered his price. All right, so that's all true. Your neighbor lowered their price, but what we're still seeing is appreciation of like 1-2% annual appreciation on homes. So yes, prices have been reduced, asking prices, but those sellers are still sitting on so much equity. Nobody was going backwards. Anybody who's been in their house 3 to 5 years, they're not going backwards. Okay, now if you bought your home a year ago and you're trying to sell it, like you might have gone down a little bit, right? And most sellers, potential sellers, have to understand that. Homeowners in general, I always tell people, expect to be in your house 3 to 5 years before you even break even. By the time you pay your fees and your taxes and title companies and any incentives that you're offering to the buyer, and then you're paying off your mortgage and any fees that were attached to that mortgage that they rolled in on top of it, you've got to live in your house 3 to 5 years under normal circumstances. Now we're in circumstances where we're appreciating less than normal. We're still appreciating 1 to 2% a year, but we're not appreciating at 3 to 5% a year. So you've got to anticipate that, like, hey, it's going to take a little bit longer to get my equity out. But for those that have equity, yeah, maybe they didn't sell at the peak or whatever, but you know, to the normal homeowner, that's fine. I would say to the average person who's not some sort of real estate investor or not this big portfolio person, if you're just the average homeowner, look, just worry about yourself and what's going on in your life. What does the timing say for you? Do you need a place to live? Is your family growing? Did you get married? Was there an unfortunate death in the family and you need to downsize? Are you retiring? You know, those are all circumstances you got to look at. You look at this data and you say, hey, look, the market is what the market is. I see it was trending up. I see it was trending down. But it's okay because I expect to live in this house 5, 7, 10 years. This is a forever home for me. Or maybe this is the next 3.5 years while I'm on military orders to Jacksonville, whatever. But when you do that, when the time is right for you, like, you're going to be fine. We look at the historical data, okay? Sellers are holding strong equity. There's little motivation for them to cut prices. In general, all this, what does all this mean? Basically means, like, hey, the recession we've been in for housing is already here. There's uncles who live in the spare room at your parents' house that are going to tell you don't buy because it's going to crash and wait. But I'm here to tell you, over the last 3 years, okay, 2023, 2024, and now 2025, they're only projecting that we're going to finish the year with 4 million sales nationwide. And why is this important? Because for 23, 24, it was only about 4.2, 4.5 million, and then here 4 million. Guys, normal circumstances, normal years, what's considered normal in a healthy market, we're selling like 6.5 million homes in America annually. So if we've been selling 4 million for 3 years, that's an accumulative of 2 million, 2 million, 2 million down. That's a whole year's worth of transactions that we've lost from the market. So we are in this housing recession. I got to tell you, 2025 has sucked. It sucked for business. Now, we're still alive. We're still surviving. The luxury homes that we're building, we're selling 3 out of 4 of those before they even hit the market. So that's kind of in its own world. But it's definitely been tough. Buyers expect perfection. And if your house is not ready to go as a seller, they'll look elsewhere. If you're not giving incentives, if you're overpriced, they're gone. And they'll go down the street and buy it from a new builder. I know there's new builders out there that are offering 3.9% interest rates. Now, today, I just looked and VA interest rate is in the high 5s. So if you're active duty or a veteran and you got access to that VA rate, it was in the high 5s average. That means you could get low 5% interest rates. That is so good. And I know people think that's high. That's just because they're rate shocked from a couple years ago when they made the Fed rate 0 and rates got down so low. But here's the deal. When we zoom out and we look at all the data, the all-time average is 7-8%. So you're sitting at like a fantastic interest rate if you're anywhere in the 5s. Incredible market, right? So it would be a good time to take advantage of that and get those rates that you really need. That being said, right? So we've got good interest rates. We've got We've got rates coming down. We've got inventory. We have sellers that understand my house has to be perfect. I mean, I've had sellers put roofs on, new electric panels, new windows, new doors, new floors, because they got to get the house ready. Nobody wants to fix your junk, right? However, we're still struggling with affordability, and that's a whole conversation of itself. Buyers perceive that there's overpricing. They look at the higher mortgage rate and what they feel is high compared to a couple years ago. They see inventory is up, and they're still kind of just like waiting to see what happens and hoping that they get some relief. And quite honestly, we're feeling that. I hope there is too. I hope that there's some relief. Now, it's a double-edged sword, because if you're a homeowner, you're like, well, I don't really want. I bought. I got a job. I got a family. I'm well qualified. I bought a house. I got a good deal on it, but I still paid the market price for this house, and I don't just want my equity gone, right? So it's a complex thing to figure out affordability. What does this mean? Does this mean we're building smaller houses here or there, or we keep parts of town? So it's kind of a tough conversation, but it is something that we're going to go over here in a couple of days. I've got like this article from adamdata.com that I want to go over. So we'll maybe do that on the next episode. We won't get into too much. One last thing I do want to talk about here in Jacksonville is last week. So this is the week ending in October 24, 2025. Jacksonville was number 4 on cash offers, top 10 housing markets for cash offers. We were number 4 here in Jacksonville. What does that tell you? I mean, homes are moving here. Homes are selling. We just closed on another house on Friday. I'm meeting with more sellers who are thinking about making in-town moves. I'm meeting with people who are separating from the military. They're going to list their house and they're going to move. I've got people moving in on orders. So Jacksonville is definitely a moving market. It's shifted a little bit. And when we zoom out and we see what's going on nationwide, we can see that our sales are down. Well, they might be up in other parts of the world. What I'm seeing, the main thing I'm seeing is back post-COVID there in 2021, 2022, you had this like max exodus from the Northeast coming down. Everybody was leaving up there and they were coming to Florida. And I've been here a couple years. They don't like the politics. They don't like the heat, whatever it is. They just miss home. And I see a lot of them going back. So right now we've kind of got the opposite, where we've got more inventory here and slower sales. And then up there, they can't keep a house on the market. It's kind of an interesting dynamic. And then what it's leading to is kind of just balancing out. All in all, on paper, we have a balanced housing market here in Jacksonville, Florida. It feels like a buyer's market. Everybody I talk to, oh, we're in a buyer's market, aren't we? No, the buyers aren't just getting their demands, because sellers are still willing to say, hey, you know what? I got equity. I got no pressure to sell. I'll just rent this house out, or I'll just stay in this house a little bit longer. I don't need to move. I just wanted to see if I could, And there's still buyers that they want perfection. Like I said, it's kind of slow, but it's kind of balanced. So what this means, if you're a serious seller and you're a serious buyer, you might have to write a couple offers on a couple different houses, but believe it or not, you're going to be able to get that home that you fall in love with, that you think is a great home. Thanks for tuning in. Short and sweet, just getting back into the flow. I know I got to get the dust off a little bit because it's been a little bit, but I think I'm going to just roll with it. I don't care. I kind of am at the point, I don't know, you can see I grew the beard out to keep me warm this winter in case the temperatures really drop down or whatever. But, my wife, she goes, oh, man, it's kind of like this new self. And I was like, it's not really a new self as much as it's just like the true self. I just have been kind of putting myself in this box, playing this part that I got to play. And I'm going to be honest with you, man. I'm just here. I'm just rolling with it. I'm going to do the content that I like to do. And this is it. I mean, I hope it's coming out natural. This is how I talk. This is how I sound. This is what I look like. Rocking a hoodie. I'm getting a little sweaty in here though, because I'm having fun talking to you guys. So I hope you enjoyed it. Be sure to subscribe, hit like, share it with your friends. Go look on the blog, rigsgroupfl.com. I'll post all this in the blog where I'll have all the charts and all that stuff. If we're on YouTube, I'll have it below in the comments or on the podcast. Until next time, we'll see you later.